Okay, this is Para. In this 1 to 2 hour long video, there's not gonna be any edits. There's not gonna be any cuts, no scripts, nothing. I'm just going to purely go off of what I know about the markets, and I want to teach you everything. There's 11 sections from what to do as a beginner to fuck off. Now the fuck off part is very important when we get to it, because knowing when to fuck off uh, is going to make up if you're profitable or not. All right. So let's start with zero. What to do as a beginner. There's going to be a little bit of self-advertising in here. So if you don't like that, just fuck off to the next section or just close the video. I couldn't care less. Okay? I'm going to teach you everything here. Go through everything about it for free. So if you don't like me self-advertising, you can fuck right off. So let's start. What I think you should do as a beginner. The first 6 to 12 months of your trading journey should not be with real money in the slightest. No singular dollar should be spent in the markets. What you should instead do is invest all your money into education. Get courses, get mentors. Now, if those are too expensive, I have a solution for you. If you join my Discord server, there's a channel named Course Vault where I've partnered with a reseller on Discord, and you can get a bundle of courses. And when I say bundle, I mean like 7 or 8 courses for a very cheap price relative to what they would be if you were to buy them one by one. Okay, you can start with that. There's contents that I've studied myself. You can start with, and honestly, anything. Okay, this is just advice from me to you. If you want a cheap way to get some of the best education there is out there, in my opinion, go for this. If not, that's completely up to you. For this first 6 to 12 months, in my opinion, you should not be putting any money into markets. You should be paper trading, and you should be journaling every single trade. Use Notion to journal. I'm not gonna share my journal with you. I mean, you can just look on the internet. There's a million trading journals. Copy any of them that is in Notion, or honestly anywhere else. Just journal the damn trades, every single one. Journal everything. For example, I used to have a journal, and I would journal every single trade. For example, I would even keep track of whether 9:30 open was below the true open or not. Right? The simple stuff, but you gotta journal everything. You gotta keep records and track of everything. So that's Notion. Got a Notion. Journal every single trade. Open a paper trading account for $100. Why $100? Because I don't want you to get used to money. If you're chasing money in this game, you lose. So you shouldn't be chasing money. You should be chasing percentages. So I would suggest $100 paper account, risk $1 per trade. Aim for $2 to $3. Partial at 1 RR. So when you're $1 in profit, you partial half. Okay, partial 50% at 1 RR. So realistically, you should be making 1.5 to 2 every trade. Now, I am marking these as dollars, but you should be thinking of this as money. You should be thinking in percentages, because that's what matters. You don't need money to trade. You can just go online, look for any prop firm that looks good to you. My top 3 are ACG, Alpha Capital Group, Funding Pips, which I personally use, and FDMO. Just buy a funding account, and you'll have money to trade with all of a sudden if you actually spend the time mastering this shit. Okay. So once again, 6 to 12 months of paper trading. Invest all your money into education. I gave you a good source to get courses for very cheap. Get on Notion or any trading journal of your choice. Journal every trade. Start a paper account for $100. Risk $1 per trade. Aim for $2 to $3. Partial at 1 RR. What do I mean partial 1RR? So you can see here, risk to reward ratio 1RR. When it hits here, you close 50%. For example, if you're trading a live account with $5,000 and you risk $50, that's 1%. And if you're $50 in profit, you close half. You take 25% out, or sorry, $25 out. And then your stop loss will go into break even, like this. Break even. Alright, got it? You wanna listen, it's better to be safe than sorry. Profit is profit. 0.5% a day is all you need to get rich. Now, I'm not rich. I'm not gonna go into any details about myself. I'm just some dude who knows this shit, okay? So, that is section 0. I know that 99.99% of you will not do this. You will not do this shit. But if you do, you will not regret it, okay? Maybe it's gonna take you 2 years to finally realize that, oh wait, this is not a bad idea. Because for me, it took 2 years to realize, oh wait, I should actually probably do this. I did this, and everything changed. So that is section 0. There's not going to be any pauses in this video. I'm not going to pause at all. It's just going to be purely me talking. The only break you're going to have is like a 5-second break when I'm going to light up a cigarette. That's it, okay? So let's get started with a candle. Now this is going to be important as every single other section. So let's get into a candle. What's a candle? Let me draw one for you. Now, if you don't know what a candle is, you probably should not be watching this video because it's going to get advanced, but it's fine. So let me paint this green. This is a green candle, as you can see on, it's got a daily here. You can see green candles. This tells you on any time frame how much price moved depending on the time frame. So for example, on the daily, this candle here shows us how much price on December 11th of December moved. This is the open. So when it hits Wednesday, price opened here, went back down to this much, high this much, and closed here at the end of the day. That's what a candle tells you. That's pretty much what a candle is. We can move on from section 1 this quickly, but we are going to get stuck on 2 and 3 because this is super important. And this is why I have indicators like this one here for me. So back here, let me fix this. We have candles have 4 parts. On a green candle, we have open, high, low, close. On a red candle, we have open, low, high, close. A candle consists of 4 parts: open, high or low, open, high, low, open, high, low, close. Correct. Yes, pretty much. Let me actually fix this then. Open, high, low, close. That open is very important. On a green candle, open is where the candle pretty much opened. So here is the open of a green candle. Green candle, a bullish candle. I should not have to mark this. You should know this. If you don't, it's not fine, but we'll say it is. This is a green candle, okay? Open. Right here is the low. This is the low. I will make these text bigger so you can see. There we go. 20. Yeah. Open, low. And then we have high. And then we have still wrong key, sorry. Open, low, high, close. Right there. Now, why are these important? Because you're soon going to learn about the weekly profiles and daily candle creations. When you get into Power of 3, around 5, you will understand why this is important, because But using this knowledge, you can be able to tell where a candle might go. So, for instance, if we are trading a daily candle, let's go into 15 minutes and I'll show you here. For example, here on Thursday, we can see the weekly candle or the daily candles opened here, but it created this high here, 9:30, but it never created a low. That means it has to create a low for it to be a candle, for it to make sense. So, bam. This becomes useful in the future. Let's go back into the candlestick stuff. This is the OHLC of a candle for you. Now, premium, discount. Now I'm gonna get rid of this. So let me copy this, paste this all over here. I'll get rid of these. Get rid of this, 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 and this. Red candle, bearish. Okay. Now let's say the low of this is here and the high is here. Okay. You turn this red. Just wrap it like this. That should be better so you can see it. There we go. There's a red candle. What is premium discount? When people say the market runs off of liquidity, I disagree. Liquidity works as a concept, but I don't think it's what runs the market. Okay. Now, what is liquidity? Let's get into that. Liquidity is basically where traders place their stop losses. Okay. For instance, let's go into charts. Whenever there are highs and lows, low, high, high, low, high, low, high, low, traders tend to place their stop losses around these levels. For example, we can see here, we sweep a low, we sweep the liquidity, and then go to the other side. Right up here. That's basically what liquidity is. If you don't know what liquidity is, you should not be here. Premium and discount, in my opinion, is the correct form of liquidity. Now, what is premium and discount? I believe that the algorithm that runs these markets is designed to offer premium and discount levels for buyers and sellers. Now, we can say banks, we can say whatever. I don't believe in that shit. I just think it offers premium and discount levels and runs in those. All right. Now, where are premium and discount levels? You may ask. Lows and highs. Why high and lows and highs? Now let me draw something for you. Just like this. So here we have this low and this low next to each other. If we sweep that, go back up. You're going to learn a lot. You're going to learn a lot here. So I'm going to light up a cigarette and let's get started with this. Premium and discount. Let's assume the price of this low here is $100 and the price of this low is $110. And you want to buy, you want to find a buying opportunity to get into the markets. You would not want to buy below these because that is considered premium, right? Imagine this, the market is going up, down, up, down, up, down. You want to buy into this. You want to get into this market and buy, right? You don't want to buy here. You want to wait for cheap prices. That's exactly what a discount level is. Well, we dip below this level and get offered lower prices, such as $80, for example. Imagine this is like a stock, right? $100, $110, $80. That's a discount level. It offers it and it runs to premium levels. For example, if we assume that there's another high in here, high up here, and the price of this high is like I don't know, $130. Suddenly, we got offered $80 and it took it up to $130. It offered an opportunity for shorters in here to sell their positions and get into buys and take it into premium prices. Let's see an example here. You can see right here, same scenario, high, low. We have two lows here. We dip into discount, and then our next candle runs it into premium. Very, very simple, isn't it? Now let's dissect this movement here. We are slowly starting to get into power of three here. I will get into through the opens in a minute, but let's understand premium and discount first. I think it's better. This level, this move right here that sweeps these lows and runs back up is called a turtle soup or a Judas swing. Mainly a turtle soup. This price action here goes down and it moves up. It's called a turtle soup. The idea of this is called a Judas swing. So don't get them confused. The idea of this, the concept of this is called a Judas swing. But this little move itself is called a turtle soup. So it's mainly called a turtle soup. We call it turtle soup. But the ideology of it is called a Judas swing. Okay, because what is a Judas swing? Judas means betrayal, and swing means just swing, a price swing. Judas swing is when a swing of price betrays traders, runs to the other side. Turtle soup means the same thing. Sweeps out traders, runs to the other side. Now, why is this important? Because now we are going to get into power of three. What is power of three? Power of three is what runs the markets. This is what I master. If you want to get good at these markets, you have to master something. Okay? I master power of three. Someone else may master order flow. Someone else might trade support and resistance. Look, it all works as long as you stick to it and practice. You can be profitable from every single one of them. What is power of three? Power of three consists of three main components: accumulation, a time period in which price does not do much. It moves around like this. Usually in the Asia session, which you'll learn about, it does something like this. What this does here is it saves up money. Okay? It creates a premium and discount level. It saves up money on the buyer side and the seller side to then create a manipulation level. Manipulate both sides, get rid of everything to continue higher. That is what a power of three is. So, let me get my rectangle out. This move is right here in the power of three terminology is called manipulation because it is manipulating traders. Okay, it creates a swing, manipulates everyone into thinking, oh, we're going short, just to end up distributing higher. So, power of three, A, M, D. Accumulation, manipulation, distribution. Right? Accumulates, manipulates, and then distributes. You can see these in the markets every single day. Let's go into 15 minutes. Let me show you a couple of examples. Here we have accumulation, manipulation, distribution lower into where lows that it was targeting. Here we can see accumulation, manipulation. This manipulation, again, this is a continuation of the manipulation. And then distribution lower. If you also zoom in, you can see an internal power of three. Accumulation, manipulation, sweeps both sides and then distributes lower into its targets. This happens every single day. Accumulation, manipulation, above these highs. You can see right here, above these highs. Distribution. Once again, we have power of three inside of power of three. So when you see me take a long like this, you can see accumulation, manipulation below the slope distribution. It's a small power of 3 that is a part of a bigger power of 3. So in this case here, this all depends on time. I'll show you so many examples that this does not get confusing for you, because I'm not the best teacher. I'm gonna be honest, I am not the best teacher. But I can show you true examples, and I'll explain this to you as much as I can. So we can see a bigger power of 3 here. Accumulation, manipulation. See, it's going up, guys. It's going to go up just to drop lower into its targets, which is this gap and this low. But if you zoom in here, in the New York session, what is the New York session, para? You don't know. It's fine. You don't have to know. I'll teach you this. We can see a smaller accumulation, manipulation right below the slope. What is this called here? What is this slope move? Let me actually zoom in this, just to make it easier for you. Let me actually zoom in right here. There you go. What is this move right here? I just talked about it. This is the Judas swing, or this is the difference between a Judas swing. This whole move here is called a Judas swing. This whole entire move. But this wick here is a turtle soup. Do you get it? This wick here, it turtle soups the slope, continues higher above these highs. So it faked everyone out. That's gonna go short. Bam. Goes high, and then trades lower. Okay? Power of 3. Accumulation, manipulation, distribution higher. You zoom out, accumulation, manipulation, distribution. It is the same thing every day. Now, why is this so accurate? Now, why is this so accurate, Para? Because market runs on time. Before we get into the times for this happens and why it's so accurate, let's go into true opens. What are true opens? True opens are when there are opening prices for when certain things happen during the day. The only trade that I have marked on my charts, and the only trade that you really need, is the midnight open, also called daily open, or also called the true open. The daily true open, anything. Why is this important? This marks the opening price of the daily candle, the daily candle that we're currently trading in. So in this case here, on a red candle, it will be here, daily open. On green candle, it will be here, daily open. Now, why is this so important? Because let me just grab a copy of this candle here, right? Let me grab a copy here. Down here. I'll remove these. Don't need them. Don't need this. And let me just make this bigger, a little bit bigger. This, right? Or like, I'll do it like this. Okay. Let's mark the midnight open of this, which I mark with 4 zeros like this to represent midnight. This is where the candle opens, right? It starts accumulating around this level. Okay, I can't draw on the daily time frame so well, so let's dip back down on the 1 hour. Let me fix this for you real quick. Apologies. There we go. Now I should be able to draw easier. Price starts to accumulate. Look, just like this. It opens here. Accumulates. Creates the low of the day, just like this. Distributes higher to create the high. And closes the price. But what does this have to do with the true day open? Because the true day open is used as a universal level for premium and discount. Let's imagine that the daily candle opened at $100. Down here, when we're trading intraday, the price is $80. That is already cheaper than what the opening price gave us. So we started the day with $100 and now we're at $80. That seems like good buying opportunities, doesn't it? Runs back up into, let's say, $140 and then closes around that level. That is power of 3 intraday. Now, let me mark the power of 3 levels. This is the accumulation right here. Mark it with the blue. Like this. I want to just mark it with an A. Here with an M to represent the manipulation. And here with a D to represent the distribution. D. Accumulation, manipulation, distribution. Now there are times in the day where this occurs. We have 3 sessions in the day. We have Asia, we have London, and then we have New York. What are the timings of this? From midnight, from midnight to 2 o'clock, that's Asia. From 2 to around 05 is London, and then from 05, I believe, to around, I don't know, 11 is New York. Now, just because I mentioned all these times does not mean you should be trading each. A lot of the times in the day, I only trade New York to look for the end of the manipulation. Okay? Remember these. So every single portion of the power tree is related to a time in the day. Okay, so we've already went through. Let me bring this down here. We have already went through candles, OHLC, true opens, premium discount, power tree, turtle soup, kill zones, which are these. Now I'm going to get you into the 9:30 open. Before that, let me add a little bit more into the true day opens or the true opens. There are multiple true opens in the day, which represent certain times. True opens. Midnight open shows the opening price of the day. And then you have 8:30 in the New York session, which is NYSE, New York news release. This is when news are released. You usually mark this 8:30 timing out for premium and discount levels within the New York session for internal power of trees. Okay, and 9:30, which is the time that I trade. I'm pretty sure this is just the New York Open around that. This is when price starts to ramp up. It starts to move like crazy. It starts to sweep out traders, and it usually sets in the high or low of the day for me. Let's go on the charts. Let's look for a couple of examples. Let's go on to 5 minutes. Thursday, I took a trade here. We can see this high right here that swept this accumulation, manipulation, distribution. It happens every time. This is a turtle soup above these highs. Okay. Look at the time of this candle. You can see on the bottom of my screen down here. 9:30. 9:30. You see 8:30 open around here. There we go, 8:30 open. Goes above it. Runs down to where? Look at where price struggles. True day open. As I said, this level is used like an anchor. It's just like an anchor to kind of point the premium and discount level of the day. Okay, so midnight open right there, runs lower. 9:30 sets in high of the day, runs lower into where previous day lows. Let's go on the other charts. There's nothing on this day here. Why? Because these 2 days I did not trade, and I will tell you why. Reason being, on Wednesday we had red news, so that's just a no-no. And the day before news, I tend not to trade most of the time, because when we have news, this is another power tree, by the way. When you have news like this that send the market lower, the day before that tends to be accumulation. Accumulation for the news event to manipulate and run lower. Now, with Para, there's not much manipulation, but if you go on the ES, there's more manipulation. Right here, we can see we swept these highs out on Monday before we start moving lower on Wednesday. If we zoom in, you can see Wednesday swept out these highs before moving lower. But we did not do this on NQ. That's called an SMT. I want to add SMT on my list. Let me find my list. Where is the list? Right here. I want to add. I guess I'll just add it here. Bonus SMT. Going to teach you SMT2. Okay, so what to do as a beginner? Candle right there. Open, high, low, close. True opens. We have this open here. We also just saw the other opens here. So the 9:30 open will be anywhere around here. 8:30 will be here. Open, low, high, close. This is everything that I trade. Okay, turtle soups right there. Kill zones. There you go. Now I don't pay attention to kill zones really. In my honest opinion, you don't need to know them. I only get on charts at 9:30. And I look for highs and lows. I don't care about the London high or the Asia low or high. I do not care. I just get on charts and I trade the current price action that 9:30 is giving me. Okay? Now, what is an SMT? We've learned a lot here. We have learned a crazy amount so far, and we are 32 minutes in the video. Okay? What to do as a beginner, everything. Now we are getting into 8 and the bonus one, SMT. What's an SMT? We know that some pairs, just like in crypto, you know how all the coins follow Bitcoin, or how Ethereum moves just like Bitcoin. It's the same. That's the same case in Forex or indices. For me, someone who trades the Nasdaq, it is correlated with the S&P 500. NAS 100, S&P 500. See, they are correlated. They move just like each other. But when there is a crack in correlation, I'm gonna go down here and draw this next to the rest of the drawings. So let's go over here. When we have a crack in correlation like this, for example, here we can see. Let me, for example, mark this here as the S&P 500, and this right here as the US 100, which is Nasdaq. We can see one pair swept a low, or sorry, didn't sweep a low, while the other one did. That is a strong confluence for a reversal. And it shows which pair has more strength and which one doesn't. In this case, we can see US 100 sweeps it, and that's the one I'll be looking to trade, because we've already swept a low on it and we can get better entries. But while the S&P has not swept it, which means it's more likely it's likely to continue running higher. And the Nasdaq will follow because these two are correlated. They move just like each other. So we look for these cracks in correlation, which are called SMTs, to get a strong bias for when price wants to reverse. Okay, so keep that in mind. SMT, very important confluence. Every single trading day, you have to look for it, even on the 1 minute. If the time is right, the SMT will be correct. Is there an SMT here? Now there doesn't always have to be an SMT, but it is a strong confluence. For example, on Thursday, there was no SMT when I took this short. But there's a difference of price action. And that is also worth looking at. It's really important to compare weaknesses and price action. So, oh my lord, how much drawing did I do? Let's go here on the daily, or I'll open another chart to just so it's clean. Look at these daily candles here. We can see none of them have swept each other. Monday, Tuesday, Wednesday. Let's go on S&P. You can see how different it is here. Right? Some swept each other, some didn't sweep each other. This guy swept this guy swept this. Well, this guy kept going up. That is a crack in correlation, a strong sign for reversal. And then what happens? Boom. Boom. Move lower. Let me look at something real quick. So this day, 10th of December on Tuesday, 10th of December on Tuesday, we can see something here. Look, 11th of December. Let's go on Nasdaq charts. We can see that I marked this out, this power of 3 out. We sweep the highs on Wednesday after we sweep the lows. We manipulate, distribute up to the highs. While the S&P just doesn't do that. These highs, this high here stays intact. This high here stays intact. That is showing us a weakness in the S&P. Okay? When we see this, we know a reversal is coming. When we see that Nasdaq continue going higher, but the S&P not do anything, this is a strong sign for a boom, a kaboom. Okay? That's SMT for you. If I were to recommend something to everyone that would drastically increase their win rates, is SMT. Don't trade without an SMT. I do because my rules are so strict that it allows me to, but I wouldn't if I were you, a beginner. Let's get into entry models. So what I mean by entry models is that how you want to enter when the setup is there. This video is 38 minutes long. I expected this to be longer, but I'm glad it's not that long. Okay? It's pretty good. Obviously, there is so much more, so much fucking more that I know about these markets, but I cannot just put them in a single video. There is so much more that I know. There is the sequence of price. There is the quartile theory. There is just so much, but I cannot fit them into here. If you would like to learn more from me, join my Discord server. Okay? I used to have a mentorship, but I don't mentor people anymore, so it's kind of closed down. But I will help you out for free. You can learn with me, alongside with me. Next January, I'm going to start my funding again. I want to go from 5,000 in funding up to 200K, see if I can do it in 2025, and build my reputation off that. So join me on my journey, and we can learn together. I have a lot of resources for you as a beginner who you can learn from. I already kind of self-advertised, right, with the course wallet thing at the start of the video. But yeah. Anyway, let's get back into this. Sorry, just took a cigarette break. Entry models. So there are different PD arrays. What a PD array is different points in price where price will react to. For example, order blocks, fair value gaps, um, breaker blocks, right? Now, there are three that I normally use. So, or mainly what I use is a CISD. So I should probably change entry models here. Entry models to CISD. What is a CISD? CISD. Change in state of delivery. That is what it is. Let's say we have a coin or a pair that's just going up, setting in those higher highs and higher lows, everything. But then suddenly we do this. A CISD consists of 4 parts or multiple parts. A turtle soup, a market structure shift, right there, and a retracement. Or to make it simpler, we have a high, and then we have a low, and then we have a higher high, but then suddenly, all of a sudden, we have a higher low. This creates a CISD, also in the ICT terminology, known as a breaker block. This is the strongest form of entry model that I've seen. So you would enter something like this, stop at the high, and aim for either a risk or a set risk to reward ratio or a previous higher low. So on Thursday, I showed you an example. Let's go back on Thursday, and I'll show you a clean example of them. High, low, higher high, lower low, retracement into entry, distribution lower. This happens every single time, and it is the cleanest form of entry. Now I'm going to pause the video, and I'll be right back. Okay, back to where we were. Just took a little break. Had to do some stuff in real life. So, what did we go through? Let me check real quick. So we went through almost everything. We went through CISD. I'm going to show you a couple of examples of CISD, and then I'll go through my trade recap, and yeah, that should be it. Next video, there's going to be a backtesting video where I'll backtest for some time, take it to the price action, wins, losses, everything. So some of the trades that I took last week, I showed you this one, but I want to show it to you again because this is the cleanest example of CISD that I have. High, low, higher high, lower low, retracement into the level, bam, lower. Now this uses every single concept of that I taught you. Where how does OHLC come into play here? Let's look at the daily candle that's being created right now. By just looking at this, you can see price opened here, ran up here, went down here. See how clean that is? Accumulation, manipulation, distribution. Literally just like that. Same thing here. We can see price, the daily candle opened here, went a little lower, tweak of lows, not much. Ran higher, 930, bam, bam, bam. Did this, and then distributed lower to put in the close. And put in the close right there. Let's go on Monday. You can see an internal power of 3 on Monday that I used for continuation right here. So accumulation, manipulation. 930 hits. I know price is going to continue higher because we did not get any significant displacement lower. So what price does instead is it places higher. So CISD, high, low, higher, high, lower, low, puts it in. This and continues higher. Power of tree, accumulation, manipulation, turtle soup, distribution. You can see just like that, one higher. I only needed a 2.5 RR to the minus 25 SCDB level, but obviously you could have taken this much higher. Let's go into 5, that's another 3 minutes. Right. Let's go here into this. Now, unfortunately, I cannot go into the 1 minute to find this, but we can see let's slow here at 7. We sweep it at around 9:30. 9:30 is here, it opens here. But before 9:30, look how we put in a turtle soup. Accumulation, manipulation, distribution, all a part of a higher accumulation, manipulation, distribution, lower. Here, what I was looking for enter was 1 minute, anything that can give me to an entry. This was a high risk trade for me because I already took my profits on this, but the reversal comes in and saves me. Under 1 minute, we have a few IFVGs. Those I use for entry and took it lower. This is everything that I trade literally every single day, and it does not change. Now, some days it is shitty. They stay here on the around 9:30. I'm pretty sure around. I don't remember where it is. To be fair, but I'm not sure if I took a trade or I took a loss. I did not trade this here, but if you were to long down here as a turtle soup at the 10 a.m. macro timing, I have a video for macro timings on my YouTube channel. I'm not going to go over them here though. It's not important. Or, well, it is very important, but it doesn't have to be a part of this video. It makes it too complicated. This is just like a beginner's guide into everything that I know about price action and trade. So we sweep this low, accumulation, manipulation, distribution into what? 8:30 highs. Now why into this? Why? Because 8:30 we had news. At 8:30 we had red news. Red news opening prices here. The highest price that the news had put in was here. We sweep the low of the 8:30 news candle down around here. So the 8:30 opens here, ran down here, we accumulate right after 10 a.m. to 10 a.m. macro time. If we sweep this, we can look at this as a range, right? We see the low of the range, high of the range. I did not take a trade here. I mean, in fact, I think I took a loss. So I don't remember exactly where I took my trade, but yes, I think I took a loss. So that is unfortunate. Moving on. I think I took a long, actually, yeah, I took a long here, expecting to go high after these lows. So I took a loss there. But the correct play was accumulation, manipulation, distribution. If we had no clear power of tree here, so that was a loss for me. Here, we can see London sets end low for the day, and all New York does is it continues higher at around 8:30. 8:30 we had news, and it wanted higher. So accumulation, 3 a.m. London, manipulation, distribution happens every single day. Let's go over here. Tuesday, accumulation, manipulation runs all the way up here, all the way up here. Lower. Now, I took a trade here, and I only got around 1% profit. So, because if we zoom into here, pre 9:30, what do you see? Here, I said that we have swept some lows. We set in the CISD right here. Look, high, low, higher, high, lower, low. Or something like that. Let me see the. It always confuses me the pattern for CISD. I always get confused in that. So where is it? Where did I draw it? Where did I draw it? Where is the drawing? Where is the drawing? I cannot find the drawing. I drew it though. Come on. I may have deleted this, I guess. Oh, it's down here. High, low, high, low. Yep, exactly. Just like that. Back on the 3 minutes, back on that same day. We find it. It was around here. There. So I knew that we are going to get some sort of continuation to whatever level based on the CISD, so I took that long there. I took most of my profits here, and then I let the rest run. My targets were here for the equal highs, but it reversed back to my entry into break even, so I didn't make much profit, but I didn't lose anything either. But yeah, but the correct play, as you can see, was reversal at 10 a.m. into accumulation lows. Accumulation, manipulation, distribution. Every single fucking time. Here we can see Monday opens here, sets end the high. So London has set the high for the day. So we know that New York is now going to continue because London has set the high. How do we enter? We look for internal power of trees. Accumulation. We can see literally how picture perfect this is. Manipulation. Both sides. Now this is gonna fool a lot of traders into buying, thinking, oh wait, it's gonna go back up, right? To equal highs. It runs lower into its previous targets down there. Okay, if we're here, we're probably not going to continue. We're going to come back down here. So exactly what it does. Around 10 a.m. offers a level, and under 1 minute we had a CISD. I unfortunately can't trade it, but runs lower. Once again, the same fucking thing repeats every single day. Accumulation, manipulation. On 8:30, look at the 8:30 candle. It does not sweep this. That's because it's an SMT. If you go on the S&P charts, this low was swept. SMT, displacement higher. We can see it displaced higher. Comes into this fair value gap here, this big fair value gap. 9:30. Do you see how perfect it is? 9:30 right there, so precise. Sweeps low. Sweeps it. Displacement. Retracement. Down. This happens every single day. You just have to look for it and practice enough. Price action was not clear on this day here, but pretty much the same thing happened. Accumulation. 9:30. Right there. Take it lower into there and then back up and then lower. So this day was shit, but you can still see power of tree play out. Happens every day. Let's go back again. Wednesday. Price was to continue higher. So it does not reverse down. It instead gives us a internal power of tree to continue higher. So these two lows, we seek them. 9:30. We wait for some sort of displacement. It takes us higher. Now, did not take a trade here. This looked like shit, but you can see it play out. Let's go do this again. I can do this all day, every day. 9:30. You can easily tell if you look at this. You can tell when which point of price action puts a 9:30 candle in. I just instantly put my mouse over here because I know it's here. 9:30. Other side. Accumulation, manipulation, distribution. Let's go back again. Okay, I can't take it anymore back. It's fine. 5 minutes. I want to continue because this is it every single day. We're here. Not much here because it's a Monday. Accumulation. Here. Sorry, this is the next day here. Accumulation. Zoom in. It's hard to do. Accumulation, manipulation higher, distribution lower. Different timings. Not the best price action, but it is still in play. Opens here. Opens here. Friday. Runs all the way down. Look at the timing. 9:30. Back up. Every single day. Every single damn day. Wednesday opens here. 8:30 sets a high. 9:30 starts a distribution. Not clear, but same thing in play. Do the same thing here. 930, accumulation, manipulation, distribution, lower. Same thing in play. It's 15 minutes. I want to keep going back for a long time because I know this happens every day. Let's zoom in from here. A random ass time. 930 right there. As I said, this low SMT, most likely this sweeps this. If there's an SMT over here, it's higher probable. Long onto here. Other side, sweeps it, stops. Clean. Next day, let's check it. Internal power of 3 on the London session. Truly open, accumulation, manipulation, distribution. Next day. Midnight open, manipulation. London sets the low of the day at 3 a.m. So New York expands. 930 moves lower, below these lows, takes it back higher. This happens every single day. Constantly. It never stops. This is all I need to trade. Power of 3. This is what I've mastered. Power of 3. So, I've taken you through everything in the list here. Examples, trade recaps, everything. Now, fuck off. This section refers to the fact that if you are attached to the charts, you will never make it in this shit. It's just not happening. If you want to be a profitable trader, you need to be able to get off charts and not trade. Okay? It's that simple. If you're attached and emotionally connected, you will not win. I suggest if you are a year or two into this trading thing, that you do this exercise for 3 months. And I know 3 months is gonna sound like crazy. So just 1 month or minimum, honestly, minimum 60 or 45 days, okay? If you're an experienced trader that is struggling with psychology, I recommend take 45 days off. Only check the charts like once a week or 10 minutes a day. Just check it. And then just go outside. Just get detached from the idea of becoming a rich trader. Just do it. This makes your brain get detached from trading, because all this hustle culture bullshit where they say you have to work 24 hours every day is bullshit. I was the type of guy who would wake up at 6, cold showers, whatever. Now I wake up after 12 hours of sleep, I smoke cigarettes, and I've mastered this. And I know with enough patience, I'll get my millions of funding that I dream about. Okay? It's about just mastering this. It takes time. So don't waste your time. Okay? Don't be emotionally attached. You're not gonna make anything in the first year unless you're God. Unless you have a mentor that is telling you what to buy and sell, who has like 10 years of experience, you're not gonna make it into this shit. You're not. It's that simple. So take your time with this, and you will eventually master it. My name is Para, and this was a guide on everything I know in 1 hour. I hope I helped. If I did help, you can check out my content and everything else in my Discord server. I have a lot of things that can help you as a beginner get into this. I'm going to go over them one more time. I have a course vault. It's a partnership with a friend of mine who is a reseller. You can get any trading course that is out there for extremely cheap. There's a bundle with like 10 courses for $100, so that can help you start. There's my own closed off mentorship, but the videos are still up, so you can, if you really wanted to. I'm not gonna make claims of me being a professional or I can get you rich. No, it's just my private teachings. A lot of which you did learn in this video that I have, you know. in that section. So it's all up to you. So that's pretty much it. And I hope this helped. And I don't give a fuck if you like or subscribe. So yeah.